Yeah, I expect the economy to stop growing in Q4. And I think, but the thing about this recession is I think everybody will know we're in recession in Q4.
You're watching Silver News Daily. Subscribe for more.
Did you know that silver prices could soon explode, reaching as high as $1.50 per ounce? I know it sounds unbelievable, but Don Durret, a well-known expert in the precious metals market, has made this bold prediction. And the best part, all signs are pointing toward this becoming a reality faster than anyone expected. So if you've ever thought about investing in silver, now is the time to listen up. Stay with me, because I'm about to break down why this explosive silver rally might be just around the corner and what it could mean for your portfolio.
Yeah, I mean, gold broke out in March, especially in April. Kind of got the confirmation, and I basically became a bullish in the first week of April. Once we had that candle breakout at 2070, we ripped right to 2300, basically, kind of on a straight up. We've only had 1 month that didn't have that was down a little bit. I mean, I don't even think it was a 5% correction, which was in May. So gold has been on a bit of a tear here. But simultaneous to that, the S&P's been on a tear. If you look at their correlation, gold and the stock market, it's basically been 1-to-1. I tweeted it out yesterday about 3 times. The correlation is so strong this year. And that's my concern, because I think we're heading into a recession. And so I don't think we can all get, excited if we're gold and silver miner investors and saying, this is a bull market, jump in, throw all your money in, this is it, we're off to the races. Because silver and the miners haven't confirmed yet. They're on the verge of it, but they haven't confirmed yet. And I think they're both telling us to be careful here because of that correlation with the stock market and the fact that I think we are headed into recession here in Q4. And that sell-off in the stock market, if we are getting a recession, is going to be severe. It's not going to be, Wall Street thinks that, it's Q4 earning, we always have good Q4s. Everything's going to be fine. You always get a strong finish to the year, nothing to worry about. I think it's going to be the exact opposite. I think once we go below 5,200 on the S&P, it's kind of look out below. You go below 5,000 and then 4,800 and then 4,500. Those are all going to be levels that induce additional selling. So we go back at gold. So gold, it keeps hitting all-time highs, one after the other, but so has the stock market. They've both been, kind of trading together. I think gold is the leader here, not the stock market. I say that the stock market is the pose.
Since its peak back in May, silver has been trading in a range, showing signs of weakness for several months. But that all changed recently when it broke through a critical downtrend line that had been holding it back. This breakout wasn't just another small bump. Silver closed above this line last Friday, making its highest move since May now. Silver is heading straight toward a crucial resistance level of $32.50. Why does this matter? Well, $32.50 isn't just a technical level, it's a psychological barrier. When silver crosses this threshold with strong trading volume, it will likely confirm the next major leg of its bull market. And this is where things get exciting. Because once silver breaks $32.50, the road to $50 opens up. That's a massive leap, and it could happen fast. Investors who have been waiting on the sidelines might suddenly see silver make one of its most explosive moves in years. But that's just the beginning. In the next section, we'll take a look at another angle to understand why this breakout is even more significant than it seems.
And gold's the real story here. But let's go back to silver and the miners real quick. So I've been saying that, we got to be a little careful there until we actually see confirmation in both. So everybody this week is saying, we're going to 32 tomorrow. 32 is like the last cycle high we just had. Now we're going to go back. We get above that, and it's kind of, we could be breaking out here, but we need to get above 32 and then above 35 before we really break out the champagne. And the stock market's flat today and gold's flat. They're trading 1-to-1. And so then if we look at the miners, the miners have absolutely ripped, and they got a new cycle high here The last high was 323, and I think we didn't get to 330, but we got close, and now we're down a little bit today on the miners, which is again following the stock market. So I've been saying that we need to get Newmont to 55 and the HUI to 340, and then silver to 35. I think those are the confirmation numbers we need to see before we get super excited. I mean, it's great. The one thing that gold is showing us here is that it's not going to break down. I mean, the stock market probably will, but gold isn't. If gold has a correction, which I think it is, so let's say a 10% correction from here for gold would take us to 2322. And I think there's a chance 2300 could hold. My target has been 2250. So say 2250 to 2350 is kind of the landing zone here, which isn't severe. But if you bought this week, it'll feel severe because you're buying the top here. Silver, you go back 10%, it takes you to 27. And that's the top of my range for the correction. I think 25 to 27 is kind of the landing zone. And the reason why I have it lower, down to 25 is because silver tends to overshoot. And it tends to get hit harder in these big corrections. So that's kind of my analysis. The number one number to follow is not the gold price, it's the S&P 500. Follow that guy, because that guy's going to tell you, the real story. Because if it goes higher, gold will go higher. It goes lower, gold will go lower in the near term.
To get a clearer picture of silver's true strength, let's step outside the US dollar and analyze silver priced in euros. You might be wondering, why does this matter? Pricing silver in euros helps remove the fluctuations caused by the US dollar and reveals the metal's intrinsic strength. Interestingly, silver in euros has been respecting key psychological levels like Euro 28 and Euro 30. And here's the big news. Silver has just broken above both the Euro 28 mark and a downtrend line that's been in place since May. This is an incredibly bullish signal for the metal. The only thing standing in the way of a full breakout is the Euro 30 level. A strong, high volume close above Euro 30 would signal that silver is ready to soar, confirming that this rally is not just a short-term blip, but the start of a major upward trend. With silver poised for such a move in euros, it reinforces the bullish outlook we're seeing in US dollar terms. So why is this critical for investors to watch? It's because when silver breaks key levels in multiple currencies, it signals a global shift in momentum. Stay tuned, because we're about to dive deeper into one of the most crucial indicators for silver's future, the gold to silver ratio.
Yeah, the key for retail demand is the fear trade. And it's been very quiet. Like this summer, the fear, because the stock market has been very strong. And so we've had like local coin shops saying that there's like 5 more sellers than buyers. Some have said it's up to 10 more sellers than buyers. And the reason why you have more sellers than buyers is because people can't pay their bills, so they're selling their silver. And then they don't feel this MOMO or FOMO for buying silver right now, because there's the uncertainty isn't there. So the key thing that's going to flip demand will be uncertainty in the stock market, which is the recession. People don't realize how important it is, because our economy is so over-levered. They don't realize how important it is for the economy to grow. If we don't have 2%, let's say 1% growth in GDP, you go below 1%, you go negative, and people are just going to freak out because of all the leverage in the system. That's when the uncertainty, they'll fear trade. Now, the fear trade, it doesn't happen all at once. It's not like everybody gets afraid at the same time. That's not how it works unless you have a crash. What happens is the fear trade is it's subtle. It starts with a small group of people who start showing up buying Miles Franklin silver, small group of people, and then it expands. So it's like that fear trade it kind of has it's a certain size, if you will. And the size of that fear trade expands. And all the fear trade is investors going towards more risk off assets. So there's been very little demand for that since 2009. 2013. 2013 forward, everybody was like, I don't need to buy any gold. I'm very happy with what the Fed's doing. Everything seems to be back in order, if you will. So we've been on about a 10-year run here where sentiment in the miners and sentiment in physical has been negative. The one thing that's done well is physical gold. And the reason why physical gold has done well is the big players who don't care about silver, the big players like the central banks and some hedge funds and some of these other guys have been buying gold all year as hedging. They're kind of getting ahead of the curve a little bit. Gold is
Now, let's talk about one of the most important indicators for silver's price direction, the gold to silver ratio. This ratio tells us how many ounces of silver it takes to buy 1 ounce of gold, and it's been a key tool for precious metal investors for decades. Historically, when this ratio drops, it means silver is starting to outperform gold, a very bullish sign. Currently, we're seeing a significant shift in this ratio. A double top pattern has formed over the past 2 months, which is a classic signal that the ratio is about to drop. And when this happens, it suggests that silver could start gaining strength against gold, potentially even outpacing it. The key level to watch is the 83 to 84 support zone. Silver has been testing this range, and close below, it would confirm the beginning of a strong silver rally. With silver already showing signs of strength, the ratio breaking below this support level would be the final confirmation that silver is about to take off. In fact, some analysts believe this drop in the gold to silver ratio could be the trigger for silver to make its rapid climb toward $50. But there's another critical factor we need to consider: the performance of silver mining stocks, which are often a leading indicator of where silver prices are headed next.
been more of a go-to hedge than silver. Silver is the proxy to gold, and silver generally doesn't get interest until later on. And so the later on we're approaching, I think the number, just a ballpark number for me, is 35. I think 35, you get above 35. And the reason why is the technicals. If you get above $35 silver, there really isn't a lot of some overhead resistance for a new high. And I think people are going to know that. And simultaneous to that, if you get to $35 silver, on the other side, you're going to be over 2,700 on gold. And I think 2,700 gold is a very significant data point, if you will, for people to get interested in gold. So what's going to happen is initially gold will lead and gold will get excitement around that fear trade. We'll have more people going to gold. And then the stock market has to sell off. So simultaneous, you get to $2,700 gold, and we might go down before we get back to 2,700, which is I think we're going to do. We can talk about that. I think I just did talk about it. But I think once you get back to 27, you get above 2,700 gold, I think that's when you get to $35 silver. And that's when people start to realize that, you know what, I'm not feeling really comfortable with my stocks, my bonds, and even my cash in the bank, believe it or not. Now, this is going to be the early birds. The early birds are basically going to go, if we go into recession, is the banking system going to have problems? The smart people, the early guys, those are the ones that are the initial ones. They're going to realize it. Then they'll say second quarter of next year. The recession has been biting since Q4 this year, but it's really starting to bite, late spring. That's when we're going to start to see some bank closures. And those bank closures is really what's going to drive the fear trade. Remember, we had like 3 bank failures a couple of years ago. Well, that was really the beginning. I think we're going to see over 100 bank closures, over 100. So I don't know how much more than that, but I think we'll see over 100. And so a lot.
Let's shift our focus to silver mining stocks, which often act as an early indicator of silver's price movements. Why? Because when investors become bullish on silver, they typically pile into mining stocks first, anticipating that the metal's price will soon follow. 2 of the most watched silver mining ETF, Global X Silver Miners ETF, Sister-in-Law, and Amplify Junior Silver Miners ETF, SILJ, are now approaching critical levels that could signal a massive breakout for silver itself. First, let's look at Sister-in-Law. It has been stuck in a flat range since April, but after a surge in recent days, it's on the verge of breaking above its $36 to $37 resistance zone. its sister-in-law closes above this range with strong volume, it would signal that investors are betting big on a silver rally. Now let's talk about silver, which focuses on junior mining companies. These smaller, more speculative companies tend to be even more sensitive to changes in silver prices. Silver has been range-bound for 5 months, but it's also approaching a key resistance, a zone between $13 and $13.50. A decisive break above this range would indicate a massive influx of investor confidence, not just in silver mining stocks, but in silver itself. When mining stocks move like this, it's often a precursor to a major shift in the metal's price. And with both sister-in-law and silver so close to breaking out, the market is sending a clear message. Something big is coming for silver. But it's not just mining stocks we need to watch. Gold, a major driver of silver prices, is also making significant moves that could provide a strong tailwind for silver's rise.
A lot of those will be somewhat good-sized regional banks. And so that's going to scare people. And on top of the stock market basically being down, you put those two together. Banks are failing, companies are going bankrupt, stock market is down. That's when the fear trade expands. And as it expands, that's how you won't be able to keep in stock 5 and 10 ounce bars. You just won't. You'll be doing back orders for the next 3 years. You will not be able to, and this is how it's going to be for all of your peers. And so what will happen is that once you get about $35 silver and the fair trade kicks in, your local coin shop, it'll flip from 5 buyers to 1 seller. And they'll be out. And once they're out, a coin shop, they usually don't carry much inventory. They're usually out in 1 day. And then so the coin shops will all be out in a global, nationwide. And then APMEX, which has the largest inventory, they'll be out of 5 and 10 ounce bars. Once APMEX is out of 5 to 10 ounce bars, that news will get around. It will not take long. The internet with all the social media, they basically say, I tried to buy some 5 ounce, 10 ounce bars, APMEX is out. Well, and then they'll basically say, well, these guys have it in stock. And they'll name about 3 of them. And then a week later, there'll be one name, and then boom, they're gone. You won't be able to find any 5 and 10 ounce bars for sale, except for on eBay for 50% premiums. And those won't stay on, it'll be hard to get those. It'll be it's going to be really wild. I've been saying Q4 is going to be wild. And I think there's a good chance we'll get above 35 in Q4. And basically, we'll start to see the run on the retail side of things. I'm expecting to see flat out shortages of 1,000 ounce bars before we get to $50 silver. That's my
gold's performance is a crucial factor when predicting silver's next move. Historically, gold and silver tend to rise together, with silver often lagging behind but then catching up dramatically. Right now, gold has been on an impressive run, breaking through 2 key resistance levels in the past month and a half. This surge is creating a tailwind that could push silver prices even higher. When gold rallies like this, it often paves the way for silver to follow suit. But here's the exciting part. Silver tends to move more dramatically than gold. Once silver gets going, its percentage gains often far outpace gold's, making it an attractive opportunity for investors looking to maximize returns in a precious metals bull market. With gold leading the charge and breaking resistance, silver is poised to capitalize on this momentum. Investors should be watching gold's movements closely, as they often signal the beginning of silver's most explosive phases. But gold isn't the only metal driving silver's potential rally. There's another often overlooked factor that could give silver an even bigger boost: copper's performance. Copper has been rebounding, and that's good news for silver. Let's dive into why next.
But the thing about this recession is I think everybody will know we're in recession in Q4. It'll just be flat out obvious. You won't need 2 quarters in a row. I better go, we're in a recession here, people. I've been saying that when we get to January 1st, we're going to look back at Q4 and say, what just happened? And then the second thing we're going to say is, do we have a path forward? And if you're smart, you're going to realize we don't. there's no path forward, which is a really scary thing. And this has been building for a long time. Everybody's in denial. Most people believe the mainstream media, and if you're paying attention, you can't believe them anymore. It's all propaganda. Everything's a facade. I think it was Step Pomboy who said that this stock market is basically being held up by air. And I agree. I think it is. I think the stock market, Jeremy Grantham said this is the most vulnerable market he's ever seen. And I agree there. And it's not just the stock market that has the problem, it's the economy that has the problem. And the reason why is because when our economy, our capitalist system is based on growth. And about 40%, maybe more, of corporations right now are not making money. And we're growing now. So what's going to happen to those 40% when we go into recession? The banking system basically feels like they're in a recession because of all their CRE exposure, commercial real estate. And they're also seeing delinquencies, car loans, credit cards, mortgages. It definitely feels like a recession to them. Feels like a recession if you're in housing, maybe some of the new home builders, but even the home builders, I don't think really feel excited about this market. And then the autos, if you're making cars, I think GM and Ford are not super happy right now with the economy. I think right now you'd have to say the economy is slowing, and a lot of corporations and sectors are nervous. And and like I said, this right now, we cannot afford a recession because of the over leverage, which is going to exacerbate things. For instance, if you do go into recession, the corporations are all going to put on hiring freezes. You won't be able to replace your job. So if you get laid off, good luck replacing your job. That will happen. And then there'll be lots of layoffs. It's going to spiral out of control very, very rapidly.
One of the biggest factors influencing silver's future rally is the U.S. dollar. Historically, silver and other commodities tend to move inversely to the dollar. When the dollar weakens, silver usually strengthens. Right now, all eyes are on the U.S. dollar index, which has been flirting with a critical support level of 100. If the dollar breaks below this mark, it could open the door for a steep decline toward the 90 support level. This would be a major boost for silver prices. Why is this so important? A weaker dollar makes commodities like silver more attractive to investors, both in the U.S. and globally. As the Federal Reserve signals the potential start of a rate-cutting cycle, the prospect of a declining dollar becomes more likely. Lower interest rates tend to weaken the dollar, which in turn strengthens demand for commodities like silver. At the time of writing, the U.S. dollar index is trading just below 100 at 99.95 to be exact, making this a key moment to watch. A decisive break below this level could be the spark that sends silver soaring. And with the Fed potentially cutting rates, the pressure on the dollar could intensify, adding more fuel to silver's bullish outlook. But the dollar's decline is just one piece of the puzzle. Inflation is another powerful driver for silver, as it acts as a hedge against rising prices. In the next step, we'll explore why persistent inflation is playing into silver's favor right now.
Yeah, this is a big topic. I really don't think that people really grasp the significance of what the BRICS are doing. This all basically began when the Ukraine war started. Prior to the Ukraine war, China and Russia were basically enemies. They were not natural. They're not natural allies because of their geological location. They both want to dominate Asia, and they both want to basically make deals with those. They want to have economic deals with the countries that surround them. So they're not natural allies. And by creating that war, shifted the entire geopolitical landscape, both with security and economics. I mean, it's massive. Basically, what happened was Brzezinski's book all came true. If you go back and read the Grand Chessboard, I mean, that book explains exactly what's happening right now in Eastern Europe and in Asia. It's basically what he basically called, it's kind of reshuffling. It's reshuffling to the global order. And the U.S. was always going to have a problem with its global hegemony that was created after World War II. And Brzezinski, he wrote his book, I think 2008, somewhere in there. He basically recognized kind of how the world was going to change. There's no way the U.S. could maintain its position in the world. So the Ukraine war basically was the trigger, if you will, for what he writes about in that book, how the U.S. is very likely going to get marginalized out of Europe and Asia, both, because he called it Eurasia. So basically, Europe and Asia are natural linkages. And that's what Russia was doing with its oil exports, natural gas exports to Germany and to Europe, is it was creating this natural linkage that was kind of inevitable, this economic ally. So you create economic allies between Russia and Europe. They become, why does NATO exist, right? NATO goes bye-bye. And that's kind of what Brzezinski said, that the U.S. could not allow NATO to go bye-bye, because if it did, the U.S. would be totally marginalized, because all the economic deals, if you will, be made between them.
One major factor that could fuel silver's explosive rise is China's recent economic actions. Just last week, China cut its interest rates and launched a massive stimulus package to help boost its struggling economy. This is no small move. China is the world's largest consumer of raw materials, including silver, and when they make a move like this, the ripple effects are felt across the global commodities markets. As soon as China's stimulus measures were announced, we saw a surge in commodities like gold, copper, and yes, silver. This is a clear sign that China's economic health is deeply tied to the demand for these metals. When China ramps up its economy, silver demand tends to follow, because it's used in everything from electronics to solar panels, key industries that are set to benefit from China's renewed focus on growth. But what's really interesting here is the timing. With silver already showing signs of strength, China's economic boost could be a final push it needs to break through key resistance levels and begin its climb toward $50. As China's economy picks up steam, we could see a sustained increase in silver demand, adding more fuel to the metal's already bullish outlook. Next, we'll examine how a weakening U.S. dollar could further enhance silver's upward trajectory.
Themselves, and the U.S. is the outsider looking in. And so that war basically triggered what's happening today. And what's happening today is the BRICS nations, because Russia and China allied up, they basically said, look, why don't we just expand the BRICS, which was originally just 5 countries, right? BRICS, Brazil, Russia, India, China, and South America. That was those 5. It was just 5. Now it's over 30. I mean, it's crazy. I mean, I think right now the number of people that want to get in is like 50 nations. Even France said, "Can we come in?" And they said, "Nope." So they're basically going to keep Europe out and let everybody else in. And that is going to create, like I said, it's not just an economic alliance; it's also a security alliance. Those go hand in hand. And so the first thing that they want to do is they want to marginalize the usage of the dollar. This is really economic warfare, and Trump recognized it, and he actually said something about, we're going to penalize you if you do this. But that won't work, right? It's kind of those type of wars are always lose-lose, and so that's coming. That's one of the reasons why gold is going higher. There's rumors this week, that Russia is buying, I mean, not Russia, Russia is buying more gold. The other one is Saudi Arabia. They said Saudi Arabia is buying gold, and they have a lot of dollars. So that basically, if they're buying gold, they're probably selling dollars to buy gold. The other shoe to drop was Turkey. Turkey asked that they could be in. Now you have Turkey, Iran, Saudi Arabia, all basically aligned with Russia and China economically. This is huge, and that's what that book, The Grand Chessboard, is all about. It's all about showing that all of these countries are naturally linking up. It was like an inevitability because they're all geographically connected. And where we made a mistake is we allowed both Africa and South America to basically not align with the U.S. We had the North American NAFTA, but we never created a linkage for all South America. So now South America has gone up for grabs, and so is Africa. And so those countries are going to align with the BRICS. The U.S. is totally marginalized. So let's go, man. So that was just an overview. Now let's talk about why gold prices are going higher and possibly going a lot higher in the near term.
Inflation isn't going anywhere, and that's good news for silver. In times of high inflation, precious metals like silver are often seen as safe havens. Investors flock to them as a way to preserve their wealth when the value of paper currencies begins to erode. And right now, with inflation still running high, silver's role as a hedge is becoming more important than ever. But why silver? Specifically, unlike gold, silver is not only a store of value, but also an industrial metal. It's used in everything from electronics to solar panels, making it more sensitive to economic activity. When inflation rises, the cost of producing these goods goes up, and so does the demand for silver, pushing its price higher. We've already seen how inflation has been driving up the price of both gold and silver over the past year. And as inflationary pressures persist, silver could continue to benefit from this dual role, both as a safe haven asset and as a critical industrial metal. This makes it uniquely positioned to outperform other commodities in this inflationary environment. But there's more to this story. Retail demand for physical silver, especially bars and coins, is surging as economic uncertainty rises. In the next step, we'll dive into how growing retail demand could push silver prices even higher, and why some investors are preparing for potential shortages.
Because the BRICS want to create some type of a cross-country currency that they can use between themselves for international trade. And they haven't figured out what they want to do, but they've been saying over and over again that whatever token they use is going to have some type of a gold backing. Now, I don't think they're going to announce it in October. If they did, gold could rip to 2,700, 2,800 by year end. Some people are even saying 3,000 by year end. I'm more in the 2,700, 26 to 2,700 because I think it's going to go down. We'll have a lot of downward pressure, but I think it will bounce before the end of the year. But I don't think we get to 3. But the BRICS are the wild card here if they do announce a token that partially gold backs. Now, the problem with the BRICS currency is that it only really helps exporters. If you're an importer, you have to buy your imports with that token, and you have to buy the token. So, a country like India, if it benefited all sides, they would have already done it. And so, India is one of the countries in the BRICS that, and several of them are not exporters. So if you have to buy this token, that's like buying the dollar. You're going from one currency that you have to use, it's quasi global currency, to another one. It doesn't really benefit you. It doesn't really benefit your currency, and India knows this. So how are they going to overcome that problem? It's going to be interesting to see how they overcome it. I personally think the solution here is to subsidize the importers. The countries that import, they should get a discount to help their currency. So a country like India, maybe they get a 5% discount on their tokens because they don't, they're not exporting. And maybe they only have to pay that, maybe they only get that discount from countries that are big exporters like Russia and China. I'm hoping, I haven't heard anybody talking about this, but it seems like a legitimate way to get India's interest in a crypto-backed, gold-backed currency.
Retail demand for physical silver is skyrocketing, and this could be the key factor that pushes silver prices into overdrive. With economic uncertainty looming, more and more investors are turning to silver as a safe haven investment. This surge in demand is particularly noticeable in silver bars and coins, where premiums over spot prices have been steadily increasing. What's driving this demand? It's a combination of factors: fears of inflation, concerns about the global economy, and the belief that silver is undervalued compared to other assets like gold. As retail investors rush to secure physical silver, some experts are warning that we could be headed toward a shortage. In fact, silver dealers have already started reporting that certain sizes of bars and coins are selling out faster than they can restock. If this trend continues, we could see a situation where retail buyers are willing to pay significant premiums just to get their hands on physical silver. And with the potential for shortages, prices could rise even more as supply struggles to meet demand. This spike in retail buying is not just a short-term trend. It's part of a broader shift toward physical assets as investors lose confidence in traditional markets. And as we've seen before, when silver supply tightens, prices can move rapidly. But this retail demand is just one piece of the puzzle. In the next and final step, we'll look at how all these factors come together to make Don Durret's prediction of $1.50 silver a very real possibility.
No, I don't think so. I I mean, it's a possibility, but I think it's a low probability. I don't think that the government is going to go anti-gold because I think they're going to recognize that this is a legitimate option for investors to own gold. I don't think they're going to see it so much as kind of anti-dollar, although it is because you're trading your dollars for gold. But on the whole, here's an interesting thesis. Basically, is I think that the big money, Wall Street's going to be buying gold. So it seems like whatever Wall Street wants, Wall Street gets. Now, if Wall Street didn't want to buy some gold for hedging their customers, then yeah, there probably would be. But I don't think that Wall Street is going to, they're not pro gold, but I don't think that they're going to, backlash against it. That's just my gut feeling. I just don't think there's going to be like gold confiscation, that stuff. I just don't see that happening at all. I see, crypto and gold. As a matter of fact, I think the government's more anti-crypto than they are anti-gold. And I don't think that's going to flip when now they're more anti-gold than anti-crypto. It's like these are new assets. Well, the crypto is new assets, but these are assets, both gold and crypto, that people use as hedging, as investing. And I don't think the government is really going to attack both of them. I think we're kind of past that. Although if Harris wins, I do think she will be anti-crypto. She'll try to slow things down. There's a lot of unknowns out there. But where I do think that they're going to go against is silver. And the reason why they're going to go against silver is because there's going to be shortages. And once there's shortages, the corporations are going to be calling their congressmen and senators and say, I can't find any silver. I'm going to shut down my manufacturing plant. I need some help here. So I've been saying this is that once you get north of $50 silver, the potential for shortages really increases, and the potential for some type of an action by the government. Now, I don't think that there's going to be a problem with selling silver or owning silver. I think the problem is going to be with buying silver. So that's all they have to do is prevent basically retail from being able to buy silver. So that would work really well for them to basically create supply and.
So how does all of this add up to silver reaching $1.50? Let's break it down. We had a perfect storm of factors aligning to drive silver prices higher. First, silver has broken key resistance levels in both US dollars and euros, signaling a strong technical setup for a rally. The gold to silver ratio is beginning to decline, suggesting that silver is poised to outperform gold in the near future. Silver mining stocks, which often act as a leading indicator, are on the verge of a breakout, pointing to increasing investor confidence in the metal. But that's just the beginning. Gold's strong performance is creating a tailwind for silver, and with copper also rebounding, we're seeing a convergence of bullish factors across the commodity space. Then there's the weakening US dollar. If it breaks below key support levels, it could unleash a flood of demand for silver as a hedge against a falling dollar. Inflation remains a persistent issue, and silver's dual role as both a store of value and an industrial metal makes it an ideal asset to protect against rising prices. On top of all this, retail demand for physical silver is surging. with potential shortages looming as more investors rush to buy. When you combine all of these factors, technical strength, rising demand, the influence of gold and copper, inflationary pressures, and a weakening dollar, it becomes clear why Don Durret believes silver is on the verge of an explosive rally. Breaking through $32.50 is just the beginning. Once that level is cleared, silver could rapidly shoot toward $50, a level that would mark one of its largest gains in years. Now is the time to pay attention, because this silver bull market might be just days away from taking off. Keep a close watch on these developments, and don't forget to subscribe for the latest updates on silver, gold, and the global economy. Remember, this is not financial advice. Always do your own research before making investment decisions.
Crash the price. It'd be great for. So I think what they would do for me, if it was my choice, the first thing I would do is get together with the G7, even G20, and basically say, look, let's outlaw the silver ETFs. We got to empty them out because there's shortages of silver. Those guys are sitting on 1 billion ounces. We need to dump that 1 billion ounces on the market. And initially, that would probably push silver down maybe 30%. But once they went through that 1 billion ounces, because then people would start hoarding it, right? Throw the 1 billion out there and it would probably be gone in a year. And once that inventory is gone, then the silver price will start going back up. And then what they would do is they basically create a law that retail couldn't sell, they couldn't sell it. So the wholesalers could only sell to fabricators. That'd be really easy to do. Now, they could just do the latter. Let the ETF stay in place. You can buy paper silver if you want, but you can't buy retail silver anymore. You can only sell it. That might solve the problem. But I see either one of those happening or both or something else. But yeah, but somewhere between $50 and $100 silver, I think we're going to get a big correction when they do this. But I don't think it'll be long lived. I think after about a year, once that inventory is worn off, and the inventory is gone, I think a lot of people are going to hodl, are going to hold on to their silver because they're not going to force people to sell their silver. But so people will hodl more, and there'll be a black market where people are buying from each other, absolutely, because you can still sell it. But the rest of the world, this is where it gets interesting. So they could do that like in the G7 or the G20, but they couldn't do it globally, which is interesting, right? So the rest of the world who basically didn't outlaw the purchase of retail silver, those guys are going to keep buying. So after a year, silver prices are going to start going back up again. So all they can do is basically kind of fix the inventory problem to a certain extent and lower the price, but it's going to be short-lived. So if you're a hodler, I think eventually after this, like we might have a 1 year down. I think silver starts rolling.